with a surprise offer for David Jones, is there a money-making opportunity in buying DJ stock tomorrow on the hope that another bidder might open up their coffers to top the South African Woolworths bid of $2.1 billion for the treasured retailer? Well, Mike Kendall from JB Weir, how are you, mate?
Good evening, Peter. I'm very well.
Now, I'm posing this question, purely speculation. It's not financial advice for anyone listening to this, but I do remember many years ago interviewing Rene Rivkin before he passed away, and Rene said, often in takeovers, the first bid is not the last, and there can be money made to get in after the first bid. Mike, over to you.
Well, I'm not sure I'll embrace the analogy with Mr. Rivkin. However, Peter, I would go on to say, look, the market's telling us at the moment they're not expecting one. The share price at this stage a little bit shy of the offer price, and often for investors that are looking at this situation, when we do see a takeover bid, if the market's speculating there could be someone else sitting around the corner just waiting to drop a higher offer through, it's certainly not reflecting that in the share price at this stage.
So you're saying if it was, say, 20 cents more than what the offer price is, that would be the market saying, we think someone else is coming in?
That's exactly right. And look, the Woolworths Group looks like they've got a pretty interesting deal here. They're saying by 2019 they can extract an extra $130 million a year in profits. Now, certainly, if this deal goes through, and it's yet to be approved by shareholders, the vote's in June, I understand, certainly they've got a huge slice of prime Sydney real estate and prime Melbourne retail real estate as well as part of the deal. I think one of the interesting angles here, Peter, couldn't be so much where to now for DJs. Maybe that you could say is a fait accompli, although it's not done till it's done. But maybe what's the story for Myer from here? And maybe the game could be, is someone else now going to have a look at Myer? Could Myer be running the slide rule over David Jones? I think most in the market are suggesting it might be a bit of a stretch for them to top this bid. So the next question is, well, what does that mean for Myer in terms of their future operating in Australia, and whether they can continue to run alone?
Yeah, it's interesting. You know, there's Myer at this stage hasn't withdrawn, has it?
No, Myer has withdrawn. Today they've come through and they've said that they're going to stick to a very strict valuation disciplines. They can't make those kind of numbers stack up. They put forward the merger of equals proposal, but clearly they've withdrawn that merger of proposals today.
I've got to say, looking at David Jones, I think I'd take away about 3 floors of department floor space and put very fashionable New York style apartments, and they'd probably get a lot of their money back straight away.
Absolutely, and certainly the capacity to build up, and Woolworths, you know, they're a big organisation. They can certainly bring opportunities such as to redevelop and certainly go many stories higher if they get the right approvals to develop, as has been speculated. So the sky's the limit there. I mean, people might be wondering what some of the logic at its simplest level. This will catapult them to one of the top 10 retailers in the world. So they're buying capacity for things like cosmetics. Instead of buying 100,000 units for the Australian market, they'll be making a global order of 1 million. So your ability to get your cost price down and increase your profit margin goes up. Myer's going to have to compete with that kind of thing. So interesting dynamics. It's going to be one to watch.
Very interesting indeed. Would you, what are you saying to your clients when they're asking you, should we buy Myer, Mike?
I'm saying just wait at this stage. I think there's a little bit more in the Myer story maybe to play out, but I'm certainly just suggesting, well, it looks like David Jones, this could be successful in the absence of a high bid. So David Jones shareholders sell. Myer, let's just wait and see for the moment.
Okay, let's go to Worley Parsons. What's going on there?
Well, one of many, or the next off the rank, Peter, announcing a restructure from the mining services sector. The company announcing today they're going to undertake a number of redundancies and a major restructure of how their operations are set up. Won't go into the minute detail, but in effect, previously the company was set up on a commodity and regional basis, so Asian operations, Asian iron ore, North American operations, North American iron ore. They're now going to split it out on things like services, so oil and gas, for example, or mining services or iron ore, as an example. So this restructure, they're saying, is going to have an immediate hit of a $35 million hit to profit as they restructure the business, but they have reaffirmed guidance for the year in the 260 to 300 million profit range, which is down from where they guided last year. But I think the market was pleased that it wasn't lowered further and that the company's making some steps to restructure the business for the more challenging environment of lower commodity prices for mining services.
What are you telling your friends and family about Worley Parsons?
Well, that's a tough one. I think if you're there, you've got to weigh up whether you're prepared to be patient. I think Worley Parsons, because they're so heavily in oil and gas looks pretty promising for the next couple of years, could have a few profit surprises up its sleeve once this restructure goes through. But I think you're going to have to be a little bit patient. Mining services has certainly been sold off. It's one of the few value sectors around the market at the moment, but there are certainly challenges for those operators in how they're going to deal moving forward.
The thing I find interesting is that, and you've noticed it too, that Rio and BHP are being really well treated by overseas markets. Is it purely because they've cut their costs and they've, the dollar's a bit of an advantage to them, or is it that maybe if this cyclical improvement of the global economy comes through over the next, say, year or so, that will actually be okay for mining companies? And the next question is, well, could some mining services company be a bit of a surprise package come, say, 2015?
Well, look, they could be. I think there's a couple of things in there, Peter. I'll try and grab the main ones that I picked up on. First of all, I think investors are buying Rio and BHP for the potential for shareholder returns. Both companies have been banging the table pretty loudly that there could be some sort of return of capital or increased dividend to shareholders. Whether it manifests remains to be seen, but certainly that's been a healthy underpin for the share price over the last couple of months.
Right.
I think you've got a question of recovering North America and Europe versus continued softness in China, or maybe not quite where the market wants. How that tug of war is going to play out remains to be seen. How it plays on to mining services, it's an interesting question. I think one of the reasons that BHP and Rio have been able to keep their profitability so solid while commodity prices have been coming down is because they've been squeezing the suppliers of services and the suppliers they use, and that's why mining services have been hit, whether it be Worley Parsons, UGL or whoever, because the big miners have been saying, we're not going to use the services or pay the prices we once did. So I don't see that dynamic changing quickly because commodity prices should stay modest.
No, it's for the courageous, Michael. Ramsay Healthcare and UK competition report.
Yeah, look, just as a final comment there, the UK Competition Authority came out today saying that that while competition in the healthcare or private hospital sector is not what they'd like it, there are pretty high barriers to entry, not a lot they can do to change it quickly. Other than the sale of a couple of hospitals in London, it's a status quo, which in some ways is good news because there's not going to be any forced sales where Ramsay operate outside London. But maybe I think Ramsay would have been hoping, Peter, that they could have seen a few more forced sales of private hospitals because they've got $1 billion war chest to go out to do some shopping and buy. So maybe a little bit of a missed opportunity for Ramsay, but certainly the share price not taking too much of a hiccup today in that news.
So what should we take from the 6-year high in the stock market today?
Interesting question. I would suspect that Ramsay's going to struggle to keep pushing forward unless it can demonstrate extraordinary profit growth. I think it'll still deliver very strong profit growth, but for investors they need to keep in mind two things. There's two big potential issues coming to the market over the next 6 to 12 months in healthcare. One of them is HealthScope and the other one's potentially Medibank. So if those two big IPOs come to the market, institutional investors that really dominate where the share price moves from day to day, Peter, are going to look for opportunities to fund buying into these IPOs, and I suspect Ramsay Healthcare might be a selling casualty. Not a heavy sell down, but there'll be lightening of positions to buy into these new IPOs as they come to market, and that just might flatten some of the upside.
Okay, and finally, home loans. Really pretty good news on the home loan front. I've got here in February $2.75 billion worth of loans for new homes. Now I'm thinking increase in supply, that's good for containing house price increases, but more importantly, jobs, and companies like Boral and CSR, they're going to get a bit of demand for their product, aren't they?
Look, they certainly are, and a lot of that upswing's been priced in so far, Peter.
Yeah.
As we talked about last week, you know, it's the first mover part of the Australian economy when things start to fire up outside mining. But Boral and CSR, I'm certainly running the slide rule over at the moment. I've got a couple of clients already there. I'm just wondering, has it got a bit more to give if this housing boom goes or continues to go for a bit of a run?
Yeah, particularly when you're seeing new construction. It's all very well seeing house prices go up. That can be just basic inflation. But these numbers for the supply of housing, quite interesting. Mike, thanks for joining us.
Thanks, Peter.